Bitcoin will follow prior patterns. In general, each cycle has a high point and a low point, each of which is around 10 times higher than the high and low point of the previous cycle. The high points are largely due to a combination of new investment, followed by an inflationary bubble. The low point is then caused by the popping of the bubble followed by new technology. So the last cycle had a high point of $1,000 USD and a low point of $300 USD. The next cycle was predicted to therefore have a high point of $10,000 and a low point of $3,000, but the inflationary bubble just grew larger than expected before it popped. I actually believed for a while the low point would have adjusted up as well to $6,000, but then new technology allowed for cheaper mining, which helped to push the price down towards the previous predicted $3,000 range. If this pattern holds true, the next cycle will, in just a few years, reach a high point of $100,000 and a low point of $30,000. That is to say, it will grow to at least $100,000 and then crash hard, try to recover, crash again, and gradually reach its low point of $30,000, at which point everyone will once again claim doom and gloom and ask questions just like this. There are, of course, some alternatives going forward. Bitcoin has a scaling problem that has not been resolved, which is why, during the last high point, the transaction fees were unreasonably high and congestion was high with it. In all likelihood, Bitcoin will not be used as an actual currency going forward, but rather take the role of a kind of gold standard on which all the other coins will continue to be indexed. If you look at the graphs of other coins, they tend to independently go up or down in relation to Bitcoin, but only by a small margin. When Bitcoin itself goes way up or way down, they all go way up or way down with it. Now, why does this happen? Bitcoin uses proof of work for the security of the network. This is one approach to ensuring that the transactions are true, although if someone were to control 51% of the processing power, they could take control over the network, which is why more mining is generally seen as a good thing. If there were no ASIC miners in existence, mining would use a relatively small amount of energy and the price would be relatively stable, but as miners are developed, it becomes more and more centralized as more and more large groups seek to make the highest possible return with ever-increasing energy costs. Either way though, because of the hardware required to mine at all, and because of the energy costs involved, there is a minimum cost of production, below which Bitcoin will not be sold, or if sold, will be sold at a loss. The only way for the price to go below this point is if new technology significantly affects the electricity costs, or if the global energy costs go down significantly. In the case of the current cycle, the low point really did seem to be around $6,000, but then new technology went online that cuts the energy costs in half and therefore the price of Bitcoin cut in half. So, what causes the high points? Well, in every currency system someone has to receive the initial amount of money. Bitcoin has the money supply fixed so that every 10 minutes a set amount of coins are released, but then every few years this cuts in half. This halving event essentially doubles the cost of mining. The idea is that, eventually, transaction fees will replace this, although on this point I have concerns about that actually happening now due to the Lightning Network. The next halving event is less than a year away, so over the course of the next year the price should gradually increase to at least $6,000 as miners anticipate for this to happen. This will lead into another gradually increase, which will trigger an inflationary bubble as the general public sees the price go up and want to get in on it, not realizing that the best time to buy is now when the price is low. In fact, we already see indications of it trending upward. I have no doubt that Bitcoin will reach an all-time high in just a few years, but I am probably not going to maintain my holdings in Bitcoin directly because I fully expect major congestion and high transaction fees. Unless and until Bitcoin actually takes steps to scale to the traffic expected for such prices, it's just not going to be as competitive, and if it can't compete in the next cycle it will likely be replaced with a coin that can. Just because it's first to market doesn't mean it has to be a success, and there are many competing approaches out there. If, however, it can find its place as a store of value rather than a means of exchange, or if the scaling issues can be solved, I have no doubt Bitcoin will be worth a high point of $1 million USD in 6 to 8 years, with a low point in that cycle of around $300,000 USD. Other coins are similarly affected, by virtue of the fact that they are indexed to the price of Bitcoin, but they too can have a minimum cost of production depending on the model they used. A coin that uses a combination of proof of stake and proof of burn will likely be the most stable on its own merit, but would still be expected to increase in price simply by increased adoption. Bitcoin, BTC, is a volatile asset, which means it goes up and down more than the typical blue-chip stock, in fact more than just about any type of stock that is traded on a major stock exchange. But compared to other cryptocurrencies, there are over 6,000 of them, which are listed on CoinGecko and CoinMarketCap. Bitcoin is much more stable than most of them except for the ones that are pegged to the dollar like USDC and Tether. What makes Bitcoin valuable is the fact first of all that it was the first of all the other cryptos to solve the problems that digital assets have. You can check my other answers for more details on what those problems were. So now to answer that first question you asked, what makes BTC price go up? Well, just like anything else, it is a supply and demand relationship. The BTC algorithm was designed by Satoshi N specifically to have a dwindling supply of new BTC coming available. This happens because of the halving of the mining reward. That happens approx. every 4 years. The last halving was May 2020 when the reward was 12.5 BTC per block and now it is 6.25 BTC per block. This dwindling supply increases the competition for acquiring BTC. And as long as there is consistent demand or increasing demand, the price tends to rise. Currently the demand is outstripping the supply with big players like the company Square, PayPal and others buying BTC massively. Now to answer what caused BTC to go down? Well, nothing ever goes straight up. Some of the experts have predicted BTC will be worth a great deal more in 1 year. Like 50k or 100k, and some are saying even 250k. But even if they are correct, BTC will take a roller coaster ride to get there. If the price rises really fast for a while, it will get overbought and that will put downward pressure on the price. Once BTC reaches its new all-time high, it will crash again. For right now you probably don't have to worry about that happening. It will probably take about a year for it to establish a new ATH. So toward the end of 2021 be thinking about an exit strategy, that is if you own any BTC at that time. Hope this helps you understand it a bit more. By the way, please be aware this is not investment advice. I answer these questions because it helps me think more seriously about how I will invest the small amount of extra money I have. Please do your homework and due diligence before you make any investment.